Good evening, Canada. We are back with our weekly talk show, Voice of Canada. Your host, Asphandiar Wadiwalla. My co-host is Cindy Young. And today we have very dynamic speaker, Erum Farouqi. Welcome to our show, Voice of Canada. Just inform our viewers of Voice of Canada your name and what is your education.
Sure. Thank you so much for inviting me on the show and giving us this valuable platform to share our passion. My name is Erum Farouqi. I'm a licensed financial professional, and my background is I've done my MBA from IBA in 2000. I'm a gold medalist from IBA.
Lovely. Awesome. Mashallah.
And my specialization was in marketing. So I worked as a marketing executive for a couple of years, and then I realized I need to know numbers. And then I came to Canada 20 years ago as an international student.
Oh, wow.
And I went to University of Toronto, the top business schools in Canada, Rotman, and I did my second MBA in finance and strategy. And since then, I have 10, 15 years of corporate work experience. And now I work as an independent broker. And my main passion is to help our community educate them on financial literacy, because I feel it is a life skill everyone should learn.
Definitely.
Absolutely.
Very good. Go ahead.
Good evening, everyone. I'm Cindy Young, and I'm your co-host for this evening's show, Voice of Canada. And a very special welcome to our guest this evening.
Thank you.
So the first question, why did you decide to become a financial professional? And why do you feel financial literacy is important for our community?
That's a great question to start. Based on my personal experience, I feel like we always learn the hard way.
True.
So I think one thing I've learned in my life is financial literacy is different from your degrees or for your professional education. It's like a life skill. You need to learn cooking, you need to learn driving, to live your life. Same way you need to learn financial literacy.
Plus, in finance, you must be disciplined also.
Yes.
Exactly.
The very important
With the
point
knowledge.
with the financial, you must be disciplined, then you are successful.
Yes.
That's a very valid point, because just knowledge without any implementation
Right.
and consistency has no value. So what happened was that I was a very successful corporate executive, and many of our people, professional people in our community are. We know how to study and become a good professional, make money. But what we are not taught is how to manage our money. So same thing happened to me. I actually lost everything. There was a point that I was living in a shelter with my two daughters.
Wow.
And had no bank account, no
Where,
credit
here
card,
in Canada?
no money in Canada.
Oh my God.
And
What a story, sad story.
Yes.
it is, and when I went to the government assistance office, and how they look at your background before see if you qualify for
Sad.
government aid. And as he was reviewing my background
Application and background.
and my past income history, and he just simply said to me, "I'm sorry." And in that moment I completely broke down.
Of course.
And
Anybody would.
I said that, okay, never again. I am not going to let this happen again to myself, and also going to educate my daughters. And I think that thing from there
That
onwards,
gave us
I
spark
gave
you.
the drive to do it.
Drive to
yes,
do
I
it
was
and
like, I
achieve.
need to
Absolutely.
learn, because earning is a different skill and managing money is a
It's
different
different.
skill.
Absolutely.
Definitely.
Yes.
Two different things.
I fully agree with you.
Yes.
Iram, explain to our viewers, what do you mean by the first step towards financial independence for a family?
First step, it always start, like a lot of time people think maybe it's a very complicated step, or they need to know a lot about investments. It's very simple. It starts with budgeting. And how you said, like, discipline to save, like this, so that they need to understand their own financials, like how much income I'm making, how much money I'm spending, and then having the consistency and discipline to save certain amount. And that is the first step.
And that you have to plan well.
Right.
You have to plan.
plan.
It cannot be unintentional.
Thank you. Go ahead.
Yes, absolutely. What are some of the basic concepts that everyone, regardless of age, should understand?
Yes. So, and I think that is the fundamental of financial planning. And whether you are a seasoned professional or even just a stay-at-home mom, you should know these 3 rules of money. Because if you know these 3 rules of money and you implement this in your life, you'll be able to create wealth for your family and become debt-free. So the first rule of money is, we call it rule of 72. What rule of 72 tells you is how quickly you can double your money. So let's say if you have $10,000 today and you want to put it into investment account, saving, checking, whatever, the first thing you want to ask the bank or the financial institution, what is the rate of return on my money?
Correct.
Right? So let's say usually our people don't question the banks and the financial
They
institutions.
don't know what is the yield.
Yes, so they don't know. So what happens then? They lose value for their money. So let's say if the bank gives you 2% rate of return, and the rule of 72 say just divide 72 with the 2, so you get how much? You get 36.
Wow.
Right? So what that means is that it will take you 36 years to double your money.
God.
Oh, wow.
So if you put $10,000
That's
today,
why it's known as rule of 72.
yes, so it's a
See,
simple way.
I didn't know
very
that.
good thing too, really.
Yes.
Good information even for me to
Yeah, so that's the thing. And let's say, but if you're getting 12% rate of return, that's what the
76.
bank does. They take your money, they go and they invest into high return investments. 72 divided by 12 is 6, meaning you are doubling your money every 6 years.
6 years.
So now in 36 years, you will have $20,000. Bank will have $640,000 from the same $10,000.
$10,000.
So that is the impact of compounding. So that's the first rule of money.
Right.
You want high return. And the second rule is that you want high return with low risk.
Low risk, yeah.
Because we
Right.
always
Your investment is safe.
Right.
your
So
investment
you'll lose
is
your
safe.
principal.
Yes, so there you also have 2 options. If you want to go for high return, usually it's
The risk is higher.
Yes, so
Yes.
mutual funds and stocks. But we educate people there is a better option, which is the best of both. You do get high returns, but also comes with the guarantee, and that's index funds and segregated funds. And the last rule of money is understand the tax implications. Especially living in
Yes.
Canada, you need to know how much money you have to, pay
Taxes
to
will
the
be
government
Back
in
to it,
taxes.
right.
So you need to plan. That was the key word. Everywhere you want to
Yes.
plan.
Definitely. Every step you have to plan well here in
Yes.
Canada.
Yes. So your planning should be that you want to keep more money in your pocket and less money in taxes.
That's your
That's
tax
always the
advisor.
goal.
It will guide you.
Yes,
Yes.
in an ethical and legal way, because the government has given you a lot of incentives and different programs. It's just that people don't know how to utilize them.
Right.
So that's the knowledge we try to give to the audience.
Oh, that's awesome.
Eramjit, I would like to ask you for our viewers. Here in Canada, we have got tax-free saving account,
Yes.
which was opened, I think, couple of years ago. Plus, you inform our viewers what is the current, how much you can invest, 6,000 or 6,500.
Mhm.
Some limit is there.
Yes.
That also you tell them, and how to invest and how to be cautious that they may not over-invest.
Yes.
Yeah, exactly. So tax-free saving account is my absolute favorite. I always tell families that you should, every adult in the family should have tax-free saving account, and also your children, if they're 18
Uh-huh.
plus, they should have a TFSA.
Absolutely.
Infants can't have
Sorry?
TSFA.
Sorry?
Younger than 18 can't
No,
have.
younger,
Okay.
younger
Okay.
than 18
See,
cannot
that is also
have.
an info.
Yes, so if you're 18 plus, open a TFSA account, and people who much older, 40, 50 years, but they have never opened a TFSA,
Mhm.
they can actually take advantage of previous year's limits.
Previous years also
So,
they allow.
Yeah, so you highlighted a very good point that there is a contribution limit. You don't want to exceed it because there's a penalty
Penalty by
So-
CRA.
with the CRA, yes, because it's the money in this account grows tax-free. So you cannot put unlimited amount of money and not pay taxes. So there is a limit, but you want to utilize the maximum limit. So right now for 2025, the limit is
So now
$7,000.
it's 7,000.
It's
Very good,
7,000. So
very good.
they announce every year. So if somebody has not utilized TFSS since the beginning, and
They can have the previous years also.
so they have almost $102,000 contribution rule.
Wow.
Wow.
Yes. So to check accurately, you can check your notice of assessment, your tax return.
Yes.
They actually tell you that how much TFSA contribution room you have.
And even from TSFA account, that can be also reinvested. Tell
Yes.
them.
Yes.
So that's a brilliant
Yes.
point, because I think a lot of time people just open the account and they don't know that is just the box that you
Keep
categorize
the
your money.
amount
You
dormant.
invest within
Yes.
that box.
Reinvest. Go for mutual funds, whatever you like. You
Yes.
can
Yes.
reinvest.
Yes.
The next, once you decide the account, the next decision you make is what is the underlying investment.
Right.
And that's where you choose whether mutual funds or GICs or index funds. So that's where you go back to our rule of money, second rule, that get the high return but safe investments. Index funds or segregated funds, because
Yes.
they are market-based returns, but they come with guarantee protection.
Inform our viewers that even TSFA can be maintained in US dollars too.
Yes,
Mm.
absolutely. You can maintain it in US dollars, but make sure the contribution room is according to Canadian dollars.
You have to match accordingly.
yes.
The limit is to be
Oh,
matched
yes.
with your US and
It's still
Canadian
the
account.
same. Yes.
Okay, go ahead.
Next question is, what is the Registered Retirement Savings Plan, RRSP, and why is it a valuable tool for retirement savings?
Yes. So you remember we talked about the third rule of money, understanding the tax implication. So TFSA is tax-free account, but RRSP, the retirement saving plan, is tax deferred account. It's not tax free. A lot of people think, oh, I have a tax free account, whatever
No.
money I'm putting in. No, it's the government way of incentivizing you that, okay, start saving for your retirement.
Mhm.
Because
Right.
a lot of you are people can see now, a lot of old people are not able to, then they cannot afford to
They cannot
retire.
sustain.
They can't
They cannot
retire,
Yes.
sustain.
or they
We
can't
say
sustain.
retirement age is 65. Yes, that's the retirement age.
It's out of question now.
Yes, but now you see a lot of 80 years old, 85-year-old people working at low cash jobs because they can't afford to
They work on
retire.
contracts.
Yes. So then, as again, we go back to your first thing, plan. You have
Yes.
to plan early.
Plan.
The money cannot, it's not going to come out of the account. You have to plan and start saving at an early age. Over the period of time, you will have money in retirement funds. So what happens in retirement saving account, whatever contribution you're making, government is giving you the incentive that it will lower your taxable income. You have to pay less taxes and you can save money for your retirement. And what the advantage is, let's say if you're a doctor, lawyer, and you're a business professional, you come in a high tax bracket. So when you deposit money into retirement saving, you get tax back from the government at your current tax rate. At the current tax rate. But when you get older and you've retired, and now then you get back at the lower tax rate because now you're into a lower bracket.
Very
So
good.
it's a great strategy.
Yes.
You need to plan well.
You need to
Plan
plan.
with a registered planner.
Yes, good advisor. You need a good financial advisor.
Eramji, inform us that what is the first home saving account? Explain the whole detail in the scheme. People may not be knowing what is this kind of account is.
Yes, it is a relatively new account. It was recently introduced in 2023. This is an incentive for first-time home buyers. And this comes in the category of tax-free accounts. Remember, we have tax now, tax-deferred, and tax-free accounts. So it is in tax-free. It is the best combination of a retirement saving program and the TFSA. So what happens, the contribution that you are making into the plan, they are tax deductible. So government will give you the tax credit. Also, when the money is invested and it is growing, you don't have to pay tax on the growth. But there is only one condition. And that condition is the money has to be used to purchase a home.
Home to house.
Right.
Home,
So if you're 18 plus, you can open FHSA. I think it's also a great incentive for younger couples, new immigrants coming to Canada, even our children. If we want them to teach the habit of saving and discipline, they can start this account and contribute into this account, and then you can use the money to buy a first home. Actually, the contribution remit for this account for the lifetime is $40,000, and every year maximum you can contribute $8,000. So imagine you can have $40,000 down payment from your first home saving account.
Nice.
So it's a great incentive. Yes,
it's a great incentive. As you're talking about all the incentives to the parents and the people,
yes,
tell them also as one additional question, what is RRSP for children?
Oh, RESP for the children.
RESP for children.
Yes, so that's a registered educational program for the post-secondary
Post-
education,
Yeah,
right?
that was
Oh my
my
So
next
we
one.
all know schooling is free in
I'm sorry.
Canada,
That's
but
right.
the
Go straight to 8.
post-secondary university education
It
is
was
not
eight.
free, and
I'm
it can be
sorry.
very, very
Oh,
expensive. So again, government is trying to give you incentive that you start planning early, start saving
Yeah,
early
7 was no.
for your
So
children's university education.
we'll be taking a short break and we'll be with you soon. Welcome back after a short break in our weekly talk show, Voice of Canada. Your host Asphandiar Wadiwalla, my co-host Cindy Young, and we have got a very, very dynamic financial strategist, Erum Farouqi ji.
Thank you.
Welcome back to our show after a short break.
Thank you.
Go ahead.
Here, next question is, what are some simple ways to start saving, even if someone doesn't have a lot of income?
Yes, I think that's a very important question, because a lot of time our community get very intimidated that they maybe need to have millions of dollars to start saving and investing.
Mm.
You can start as low as $20,
Mhm.
$25. If you don't know, just go and simply open a TFSA, tax-free saving account, and start saving $100 into your account. I tell you how much impact it can have. So imagine the other day, we were talking about if a young person starts saving $100 into TFSA, let's say 20-year-old, and he has 45 years until retirement. So if he starts saving today $100 every month, and at the rate of return of 15%, in 45 years at retirement, he will have $4.3 million in his
Wow,
account,
beautiful.
right? But what
Amazing.
is this person doing different from us? Because nobody was there to guide us, and we, when we get our income, it goes to the bank. We didn't plan anything. We didn't
Yeah.
plan anything with our money, so it gets used up. Like whenever life happens, circumstances happen.
Absolutely.
Money
But
never stays. We
No.
utilize it
Goes
in
very
either way.
fast.
Yes, absolutely. So, but this, when we, and that's why when we educate our
Yes.
youth and we educate our community, and they have time on their side, if
Mhm.
they
Yes.
start now, they can be financially independent, and they don't have to struggle like us, right,
Amazing.
at
Yes.
retirement. So the only thing you can never buy back is time.
Yes,
So
true.
it is really important to start early.
And nowadays, even your bankers are very smart. If you just advise them,
Yes,
okay,
Yes.
every month from this account, you put this much amount into my TSFA.
yes,
That
Yes.
is also done
Yes.
without any
yes.
hesitation or reminder or anything.
Yes,
Right.
exactly. And we have, like, when our clients, when they start TFSA with us, we have an online mobile app, and we have made it so simple. Like, they don't have to go to any bank, they don't have to go anywhere. From their phone, they can contribute money, $100 to their account and
Online
invest
banking.
it.
We all usually
Yes.
do online.
Online
account. We
banking.
pay all our bills and everything online banking.
Yes, and the
Yes.
other thing is always automate, because when say, okay, when I will have money, then I'll contribute. No, just automate. The money should automatically every month go into the
in
account.
Yes.
You know how we have set up our bills payment? That's how. Just think this saving is
That's
my
what
bill.
I draw
Yes.
the attention of our listeners.
Yes.
That if you advise your bankers every month without your information, they will take out that much amount, put it into your TSFA account.
Yes.
And that is good for children.
Absolutely. Yes.
If you are saving
Yeah.
for your children, that goes well.
Yes, and then that basically, when the money goes automatically, then they have less money to spend on Amazon
That's
and
right.
shopping. So
Go
For
ahead.
all of us, I think.
yes.
How is investing with you different from investing through traditional banks or financial institutions?
So, all the people, like, in Canada, the good thing is this is a very heavily regulated industry. So in terms of knowledge and compliance, everybody is doing their best. But the difference between banks and us is that they have a very transactional approach.
Mhm.
So if you go to a bank and you say, hey, I want to open an RRSP, or I want to open a TFS, they said, okay, Cindy, we need this document, and they'll just
Right.
open it.
Right.
But if somebody comes to us, we'll say, okay, Cindy, let's sit down, let's have a chat, let's understand your family situation, how many dependents you have, do you have any debt, maybe this is not the right account
Your
for you,
whole
maybe
financial plan.
so whole thing,
Guidance.
we look at the whole thing, and then we basically give you a customized solution for you.
Oh, very nice.
Erum, inform our viewers of Voice of Canada, what are the guarantees of protection you offer on the investments?
Yes, so remember the second rule of money we were talking about, always invest for high return but with wisely with protection.
Yes.
Because a lot of people, and you guys are aware that they have lost money in
Lots of
stock
scams are going
market,
on.
a lot of scams, and also without knowledge investing into high risk stocks is also not a good idea. Like if you understand the market, it's good for the professionals, but we're talking about average
Newcomers,
Average
population.
people, yeah.
So, and it's their hard-earned money. Imagine if somebody is like saving $200 and then that is also gone. It's a big impact for them.
Sure it is.
So what happens, what we do actually, we invest into high return market funds, but they come with a guarantee. So banks don't have that option. Only insurance companies and these fund management companies can offer those solutions. So what happens, let's say if you have $10,000 in TFSA, in these index or segregated funds, if the market crashes, you are guaranteed to get 75% back, even if it goes to $0.
Right.
In case of death, it is 100%, meaning let's say the person who was contributing passed away and they had $10,000 in a bank, in with us in the TFSA, the beneficiaries are going to get 100%, even though the market value is zero. But if the money is in the mutual funds and market crashes, the beneficiary will get $0.
Yeah.
So it's a huge protection and
Huge impact,
guarantee.
bad
Yes.
For
impact.
sure. Oh, absolutely. How safe are the financial institutions you work with when it comes to the investments you recommend?
Yeah, that's the most common question asked always. I always get asked this because now we understand that the funds are very protected as compared to those like regular mutual funds and stocks.
Right.
But even the companies, the institution where we invest, these are 150 years old companies and they are safer than the banks. So what happens by law, the banks in Canada, they are protected through CDIC.
Right.
And they basically protect your money in case of banks bankruptcy. But in case if the insurance companies and the fund management go bankrupt, they are insured by Assurance. So if the bank goes bankrupt and you have $1 million in a bank in mutual funds, CDIC will cover 0%.
Wow.
They will only cover 10% if the money is invested in GIC. So if the money is invested in GIC, $1 million, then you'll get only $100,000.
Wow.
But if your money is invested through us in these companies and the company goes bankrupt, Assurance will cover 90%. So you'll get $900,000 back.
Significant
And if your
difference.
saving is $100,000, you'll get 100% back.
Wow.
So up to $100,000, 100%, anything above 90%.
Wow. That's a big difference.
Yes, huge difference.
Iram, when you're talking about long-term financial security, what are the most important things families should need to know and plan about?
Okay, this is something I try to educate all my clients, and I feel like, there's certain things maybe they were not important when we were living in other countries or back home. But when you're living in Canada, certain things are non-negotiable. So for instance, in Canada, we have home insurance, auto insurance, 100% it has to be done. But I add something to the list, which is it's not mandatory by the government, but I think it's a crime to walk on the street without having a will.
Yes.
And without having a life insurance, because
It's a suicide.
it's a suicide. Because in that case, the only person who is going to suffer is your family.
Yes.
Your children, right?
Huge.
And not just financially, emotionally, and also a lot of things can happen if you don't have a will and you don't have a life insurance.
Very cruel things can happen.
Yes,
to family.
yes,
very
and they
much
show
so.
no mercy because, and it's not their fault. The laws are there and they are fair for everyone. It's just that our people are not aware and they don't plan for
And
it.
it's a different culture over here.
It's a different culture.
It's a civilized society,
Yes.
a democratic country. So everybody has to follow the rule of the law.
Exactly. So that's why I feel like that's a must for the long term. If you have a will and estate planning done and you have a life insurance, you're good to go. And for that we actually provide kind of discounted services for our clients, that once they get a will done through us, they get a lifetime membership. So they can, because the will is an ongoing document.
It is.
Your
yes.
children will get married, maybe you
Yes.
buy more
Change
properties,
things.
your life changes. So a lot of
And
times
you're protected. You feel protected.
Yeah.
you're
Main thing is
protected,
this.
but the cost is a big barrier. A lot of time people think, okay, my life is anyways going to change, maybe I'll get my will done then, right? But life is not going to wait,
No.
right?
Will should be done immediately.
Immediately. So that's
should
what
not
We
wait.
always be valid.
exactly.
Yeah.
we also educate that if, again, for the will too, if you're 18-year-old, you should have a will. And what happens if they do a will with us, let's say when they get married, they buy a home, for life, we are going to change their will for free. They
Oh,
never have to
wow.
pay again.
Amendments can be done.
That's
Anytime. They
amazing.
never have to come and pay for our lawyers or anything.
Yeah.
And even in the beginning, we are doing it for, in a very, like, basically almost for free. The reason is we really want them to not to suffer. It is
Sure.
a very important thing. We want to educate our viewers.
Oh, very
Erum, I've
good.
got part 2 of the same question on
Yes.
investments. Tell our viewers about the fixed income bonds also, which banks don't sell. The financial institutions only sell those fixed income bonds of various brands and various companies and various products. Are you aware of those?
Fixed income bonds are there, but I find it a little bit challenging, especially in our community, because of the fixed interest portion.
Mm.
So we
We don't consider the religious aspects of that,
Yes.
but there are fixed income bonds also in a
Yes.
long-term basis.
In the long term basis, so so that's a great point, because for our viewers, even if they don't want to invest into, like, the mutual funds is very risky, segregated funds also has some kind of market risk. So the one that you talked about, it's a high interest saving accounts with the fixed income, so there is nothing to lose, and the return is better than the traditional accounts.
And on maturity, you get the exact amount of the floating rate.
Exactly.
If it was $100, you'll be getting 100.
Yes.
But in open market, if you have bought at 112,
Yes.
that is yours.
Yes.
Am I right?
Yes.
But
You're right.
that person has enjoyed 6 monthly the interest
Absolutely.
on fixed income.
Yes.
Right.
Yeah. Can you explain how can our viewers get started with this important process? There's a lot of information that was given, so how can they get started now?
Yes, for the will and estate planning, they can always connect with us, and then we are going to first have, like, free consultation. We are going to sit with them, tell them, understand their family situation, and then if they feel comfortable, because our goal is to educate them, educate the viewers, whether they do it with us or somebody else. We say just get it done.
Yeah.
But if you come to us, we will sit with you, have unlimited information session, make a customized will for you, and then that's it. And then we are going to, and we are, by the way, digital, so we can do will throughout North America, in US and Canada.
Oh, wow.
Yes. So we will also provide the legal witnesses, legal stamp, legal sealing, everything. And after that, and then not just the will, the other thing we talked about, the life insurance thing, right? In our industry, it has also a bad name, because a lot of time agents sell unnecessary insurance.
Mm.
And that's why we have connected the two, because insurance has a very specific purpose. It is to protect you against a financial loss. So we also try to educate the community that don't get into the trap of buying too much insurance
Right.
and paying too much money.
Yeah.
We actually guide you that how can you calculate your own self, like how to calculate what is the amount you need, and just get that.
Yeah,
Right. So when we do the will and estate planning, so those financial solutions, we also look into it, that okay, whether this person needs TFSA, this person needs the insurance, or they need
Individual
investments.
needs are there of every
Right.
person and family.
Exactly.
So before we end this question, inform our viewers how to contact you. Give your contact number and the name of the company we work for.
Yes. So our platform is, our parent company is Aegon, and to reach out to us, we work as a trusted wealth planner, and our contact information is 780-709-4668. And you can message us, and we can also maybe provide more information to your platform, and then you can
definitely, if
share it
anybody
with the viewers.
approaches us, we'll definitely forward the inquiry to you.
And anybody who comes through, because this is especially for Voice of Canada viewers, if you're coming through Voice of Canada viewers, you will be getting more special services and more, like, special discounts, and also cash prizes. Just make sure to tell us that how did you hear about us, and if you're coming through Voice of Canada, there's special gifts waiting for you.
Nice.
Number.
What about mortgage insurance? So that's one we haven't talked about yet. How is it different from regular income protection, and what's the difference between getting it through you versus the bank?
Okay, so mortgage insurance, everybody knows about mortgage, and I feel everybody who wants to own a home, they also need to get a mortgage insurance. But what they need to learn is that there is a big difference between getting a mortgage insurance with a bank and or with the insurance company, because a lot of time people, when they're doing the mortgage
Yeah, they sign
application,
it.
they just simply
Yeah.
click sign, and then they think, okay, I'm protected.
Yeah.
And you're paying premium every month,
Every
and
month, and
Yes.
even insurance premium as well.
exactly,
Yes.
every month. So but what they don't know, and it was also a news to me because I didn't know when I owned a home until I came into this business. So when you get a mortgage insurance with a bank, the underwriting is done at the time of claim.
Mhm.
That's right.
So what that means is, let's say if you're a 30-year-old and you bought a home today and something happens 20 years down the road, now somebody passed away at age 50. Now they're going to go ask all the medical question at the age of 50.
Mhm.
So imagine, like from age 30 to 50, we
Oh,
will
wow.
develop some
Yes,
kind
of
of medical
course,
thing,
yeah.
right? And also
Yeah.
they have to, the family has to go through, like, the whole process of autopsy and all those
Mhm,
things.
Oh.
But can you imagine, people don't even know they have to go.
No,
So you don't
I
even
didn't know
know.
that.
So you don't even know that you have been paying premium all these years, and you don't even know if you're going to be approved for this
Wow,
policy.
I didn't know that.
Yes, and then also if you change your mortgage provider, let's say you had it with one bank and now
You
for
go
a
to
better
other bank. Or
that the insurance that you have been paying, it's cancelled. Now you have to apply for a new one.
oh my
So
God.
it doesn't get transferred.
Right.
But when you get it through us, through insurance companies, what happens, they will do the underwriting at the time of policy issue.
Mhm.
So anything they want to ask about your medical, they'll ask you now.
Right.
Once it goes into force, there are no question asked. It's guaranteed
not
money.
It's
reverted or
guaranteed
anything.
that
It's
that's what
not.
it
It's
is.
a legal contract. Your family will get the money. There's
Right.
no autopsy, nothing. And also, you can have one policy, one insurance policy for multiple loans, for multiple mortgages. But in a bank, you need a separate policy for each investment property, right? But here you can use it for anything.
Mhm.
And also, if you change your mortgage provider, there is no impact on your insurance policy. Your protection stays the same. So those are very big advantages, but people don't know.
Right.
Another thing, our rate stays stable. Let's say if your premium is $50, it stays same.
Yes.
Even if you get older,
The whole period.
for the whole period, if it's
Whole
20
period
years,
of mortgage.
whole period of mortgage,
Mortgage, yeah.
whatever your protection is. But in a bank, it goes up as you go older.
Mhm.
So every year it
Wow.
goes up. Yes.
See, that's
Wow,
another
I
point.
didn't know
Very
that.
good information for the
Yes.
people who are
Yes.
listening to your
Yeah.
show.
Thank you
I
so
did
much. Yeah,
not know
this
that
is why
either.
and I'm so happy that you gave us this platform,
No, it was a
because the
pleasure.
whole
Yes.
purpose is
It's
to
a pleasure
educate
that you are
Very
educating
interesting.
people. Our viewers are knowing so many
Yes.
things. I myself is gaining some knowledge today.
Thank you.
Me too.
Thank
Acha,
you.
babe, because soon our time is getting out. So inform us what independent financial professional like yourself play the helping in people manage their money and grow their wealth. A little quicker.
Yeah, so it is more like a holistic approach. We've already talked about that. It's not just one thing. We'll sit with you and make sure we make a customized plan from like saving, investment, debt management to insurance for you.
Go ahead.
Perfect.
I'll be
And
closing
what
time.
are some of the most common financial mistakes people make, and how can they avoid these mistakes and start making smarter money decisions today?
Yeah, so basically the first one again, not failing to budget, not planning. That was the point
Yes.
for you. And then also chasing these quick get rich schemes. Please don't fall for those. And thinking credit card is a free cash. High
Credit
interest.
card is
It
a
is
curse
not.
It's a
for
curse.
many.
Please, it's a trap. Don't fall for it.
It's not.
Yes, don't fall
And
for
our
it.
new generation use
Yeah.
credit,
Yes.
and they are totally land flat on the floor.
Yes, they
Yes.
think it's free money, and the thing is, when they get older, they never get out of that, like,
Right.
debt circle. So don't do
And they
that.
spoil their financial history.
Yes.
Everything. And then the last one is panicking. Like, never, if you're investing, never panic withdraw because the market is going down. It's like sales. Remember when there is a sale on Sephora, there is sale on any brand,
Yeah.
you go shopping. Same thing. When the stocks go down, that's a shopping season.
That's right.
Go
And
shopping.
you must have patience
Yes.
to withhold
Yes.
that time. When it's
Ride it
low,
out.
don't
Yes.
get panic or sell off.
Yeah.
Exactly.
Just wait.
Wait
When the
and ride
right
it
time comes, you should have retention power.
That's right.
Exactly. And that's a very important point. Like, be patient.
Yeah.
It's not a get rich quick scheme.
No.
Invest and save with discipline for the long term.
Yeah.
And also panic withdrawal, meaning like whenever life gets hard, don't just start withdrawing the money and start using it. Try to do other things. I mean, never panically withdraw.
Right.
How the time has flown today, and we are about to sign
Yeah.
out. Otherwise, we had a few more questions to ask you. But anyhow, after 6 or 7 months, we'll re-invite you again to what you're doing and what other things or what benefits have come or what you have added for the people for
Yes.
their investments. So with that note, we will ask you to say quickly your final remarks, advice.
Okay, my final remark is try to learn about financial literacy. Don't take anything for granted. Learn about the rules. There are a lot of resources out there. Read books. I would recommend you a book on Rich Dad, Poor Dad. There is a app on You Need a Budget. Get that app. And then also there are podcasts like Dave Ramsey. And then there is a Financial Dad at YouTube channel. Learn about financial literacy. Don't sit and expect other people to plan for you. Even when other people, you have a financial advisor, ask them questions. Don't let anybody take advantage of you. And I wish you all the best, and I hope your wealth grows.
Definitely, you will also prosper.
Thank you so
Yes.
much. Thank you.
So with that note from our guest speaker, Erum Farouqi, we will be signing off for this week's show of Voice of Canada. Your host, Asphandiar Wadiwalla, my co-host, Cindy Young. We'll be coming back next week with the new guest. So keep watching. And we would like to inform all our viewers that since 2024, we are also being seen on Rogers and Shah TV cable network. So keep watching our show. We are one of the best TV channels in GTHA. Thank you. Have a good night. Goodbye. God bless Canada. God save our King. Thank you.